Hi, it's Annette Compo, real estate broker at Keller Williams. And today I'm going to be talking about property taxes. And I know everyone's like, oh, that topic. Well, it's a really, really important topic. So listen up. And actually, I'm going to take a second to just chat while you go grab a notepad, your phone, something that you can write and take down notes, because it's going to be really important moving forward that you understand, if you are currently a homeowner, what the next 60 days means for you. So the local municipalities, yes, I'm friends with all of them. They know I do this publication because it's so important that, yes, we pay our fair share in property taxes, but we pay our fair share in property taxes. And so you're going to get a notice in the mailbox, and that notice is going to say, this is not a tax bill, and it's going to be right at the top of your notice. If you have any questions of what it looks like, it'll be on my website. It'll also, if you're in my database, you'll get a copy of one in your email in a newsletter that's going to be going out. But it's going to say right at the top, this is not a tax bill. And that's the true trigger, because as a property owner, if you didn't know what that meant, you probably would just throw it in your drawer and not see any value in actually reading it. Well, what they're telling you is that they're not telling you that they're going to be taxing this amount of money. They're saying this is the proposed increase or possibly decrease, but the majority of the ones that I see all are increases in what your state equalized value, or what we know as being the SEV. And why that's important is that the SEV demonstrates what half of the value of your real estate or your home is worth. And that half of that value is what they consider the taxable amount that, based on the taxes for the local municipality that you're in, they times it by that. And if they increase that amount, what ends up happening is that multiplication problem now increases what we now know as being your July tax bill and your December tax bill. So it's really important in the next 60 days for you to be looking in your mailbox for that notice that comes in, because there is a very, very short window of time for you to respond to the actual local tax assessor and let them know, hey, I disagree, and schedule an appointment with them. And that during that appointment, you can actually bring in what you believe is the documentation that will show them that the taxable value on your house, which is designated by your SEV, state equalized value, is incorrect. And that's where you call an expert like myself. Our clients, current and past, this is discussed with them when we meet with them. We talk with them on the phone. They get our emails. They watch our videos, because we want people to understand that this is the only time, it's usually 14 days, that they're given a window to hear homeowners and their research that they've done to literally counter react if there's an increase in their actual property taxes. Now, the first thing I want you to realize, that first step is actually getting the document, opening it, and seeing what that is. Now, a lot of people may go to other sources to find out what their home is worth, to see if that value is incorrect or not. But that's where your local real estate agent is really important to partner with, because they're going to have the facts, which are comparables that have sold in the last year that are comparable with what your house offers. So you're not going to use a 2-bedroom, 1 bath, and you live in a 3-bedroom, 3-bath. You can't use that comparable that sold in the last 12 months as what you consider factual based. You have to use homes that are what I consider almost identical. So for instance, for my home, I live in a 3-bedroom, 1.5 bath, about 1,200-ish square feet. So I'm going to use comparables that meet exactly what that's at. And that gives you what you consider an average of what the home is worth based on the neighborhood that location is in. And when you have that information, it's important to really understand, is there enough margin between what your statement from the local tax assessor is telling you if it's going to increase your taxes or not. I always say, I feel that there's a 10, 15% margin difference in what you're being assessed at versus what the actual value is, for you to take the time to go to the tax assessor with what you consider comparables that show the current value of your home. At that point, it becomes a large increase in your tax bill that would make sense. Now, what I suggest is you don't go every single year unless there truly is a problem and you're being tax assessed at a higher level every single year. So use your time wisely, as well as the tax assessor and the council that you're going to stand in front of. And I want to take kind of like through that timeline. So you get the notice. You know how to read it, or reach out to your local real estate agent or myself to walk you through, is there enough margin, what your current value of your house is versus what they're trying to tax you on. Then that second step is, when you realize you have that margin, is to pick up the phone and actually call the number that's on that notification that you get in the mail and set up a time. And they're going to give you a date and time that works during their windows of seeing homeowners. Then at that time, you just kind of sit and wait until it's your opportune time, your scheduled time to go in. A lot of the municipalities will have chairs out in the hallway, and usually there's 5 to 10 chairs. And I go into detail about this because if you don't reach out to me and you don't know what to expect, your confidence level goes down. So I want to give you enough information that if you decide to move forward with this, you feel really comfortable going in, because not a lot of people feel confident presenting. I know it is just doing these videos. Sometimes I get a little bit nervous. So understanding what you're going into before you go into it, it changes your mindset around what's happening around you, so you can present your facts and hopefully at that point convince them that you're being maybe over-assessed too much and reflect the correct taxes for your home value. And so you're going to sit in a waiting room. There's going to be usually 3 or 4 people waiting as well. They usually have them at 5 to 10 minute increments. And when your name is called, you go into a panel. Sometimes that panel is 5 people, 8 people. Sometimes the tax assessor is actually there. Sometimes they're not. But the interesting thing is the rest of the people are volunteers. There's real estate professionals that will serve on here. Sometimes there's local municipality, people that are experienced. But a lot of times they're all volunteers volunteering their time. So obviously coming in respectful, coming in prepared, coming in with an extra packet of information of what you're presenting is also very helpful. I always come in with more than that because I know there's going to be 5 to 7 people there. I want to make sure everyone has a packet of information that I'm talking on. And then you literally have about 2 to 4 minutes to present your case on what you believe your true home value is based on the comparables, and request that your tax assessment report is reassessed. The challenging thing is there's this awkwardness at the end, because a lot of people feel like they're going to get a determination right at that point in time. And it just doesn't work that way. It literally is thank them for their time. Obviously, be conscious of the time that you're talking, because I don't know about you, but when I get excited about something and I want someone to understand where the point of view that I come from, I talk more about it. So be very conscious about your limitations, because time is very, very important, because there's other people in the hallway waiting. And then just thank them for their time and then leave. Usually within 30 days, you'll receive a notice of what their decision is. Now, if the decision isn't what you believe it should be, then that next step is to take it to the state tax tribunal, which will cost $75. And once again, almost the exact same experience, but now you're working with people more at the state level based on how the local municipality is processing their millages. It's kind of like a double check to see if you're meeting within that margin. But it also is kind of your second phase to see if there really is an opportunity where the taxes are being assessed incorrectly. So once again, I hope this information helps out, taking you through the steps and the timeline, because it's very important that the reaction time is a very short window. The reports are going to come out, like I'm going to reiterate, sometime between the end of January and the middle of March. Every municipality is different, and then their 14 days will start within that time frame that those letters are mailed. Usually that information, if you flip over the notification, it'll actually be printed on the back. But a lot of people don't always read what they get in the mail. They just kind of read the top of it. And that's why the confusion has come along, where people, raise their hand or make a phone call or do something and say, wait a second, my property taxes are higher than what I've ever paid. And it's usually not until July 1st when they get their first tax bill for that year in their mailbox. And then they realize that this short window was prior to that, back in January to March, that they actually had the time to respond. Once that window closes, your tax bill is exactly what you received July 1st and what you receive on December 1st, which is your summer tax bill and your winter tax bill. So any questions at all, pick up the phone, dial 877 Annette. I'm always here to help you. Until the next time, see you then.